What should investors expect this week? Last week saw a breakout of volatility on Friday after a quiet period, with the Dow Jones Industrial Average testing below its 20-day moving average for the first time since back in May. Now, this has been really capping a period where investors had set aside concerns such as the situation in Ukraine, the geopolitical situation in Israel, and had really been pleased by some of the earnings flow that had been coming out for the second quarter, with the S&P 500 constituents really beating to the upside, surprising analysts with the pace of earnings growth. Now, this week we're going to see more catalysts that may not be as easily dismissed. We've got a Federal Reserve meeting on Wednesday, bringing forward the end of the QE3 bond purchase program. We've only got 3 more months to go, with the Fed on track to end that program that has been really holding up both sentiment and the market since 2012. We also have the first government estimate of second quarter GDP growth after a very weak first quarter. Investors are going to be looking at that report closely. And then we also have the update for the jobs report on Friday, which is going to be important in the context of if we get another strong report, it could bring forward estimates of the first Federal Reserve interest rate hike into the early part of 2015. Now, we also have a number of earnings reports. We have Tesla Motors on Thursday that will really kind of put into context the better than expected growth we've seen in earnings. We'll see if that was actually going to continue. But really, going back to the volatility that we saw on Friday, I think investors are finally starting to recognize that the market had been weakening in terms of breadth, with a number of major constituent components such as General Electric and Boeing weakening at the end of last week, suggesting that buyers are becoming much more particular about what they're bidding up, suggesting that some of the volatility could continue in the days to come.